Hello everyone and welcome back to another episode of my 2-hour MSB model where we want to get better 1% each day. Today we are going to look at actually the perfect trade, but also at the question, what if the perfect trade fails? Because yesterday indeed, if you zoom into the entry time frame on the 50-minute, we did have the perfect trade. So let's quickly run through this setup that could have given you a 2-hour and even 5.5 hour on the second take profit trade, and then come back to our what if the perfect trade fails. So zooming out to the 2-hour time frame here one more time, we see that on Friday indeed we did reject from this pool of daily liquidity and also did break down then on the 2-hour time frame. At the latest here, our market structure would have been broken, and adding on our rules, we thus yesterday, as we couldn't reverse this trend, had a clear bias for the day, which was to look for shorts within number 2, an area of interest on the 2-hour time frame. Zooming in even further, having established a bearish bias, pulling your fib pool from this current swing high down to the low, you would have identified your area of interest on the 2-hour time frame, and then on your 15-minute, in other words the entry time frame, you would have looked for more confluence, this confluence being 1, a fair value gap on the 15-minute, and 2, this fair value gap one more time lining up with a target box on your entry time frame, the 15-minute again. In other words, you clearly would have defined an entry at around $4,443. As targets, you could have picked the current 2-hour fair value gap low, or going even further, potentially creating a new low, the 2-hour 0.5 of the following fair value gap. Let's quickly forward the chart and see what actually happened. And we see that the setup quickly played out, coming back to our entry and then breaking down to fill our profit target 1 and also 2. So why, you might wonder, am I then talking of the perfect trade that fails? The problem simply is that many of us, especially beginning traders or traders with a smaller account, don't trade the real E-mini futures CME chart, but rather through a broker. In our example here, the US 500 through the broker capital.com. And that above all means one thing: spread risk. You see it here. This is what happened to me yesterday. But does that then mean that you cannot trade on a broker like capital.com? Certainly not. You still had the perfect trade. Here on the entry time frame, you had the same fair value gap. And also if you pulled your fib, your target box was lining up nicely with it as well. The only problem was the spread. So the question should rather be how to deal with the spread risk. So let me give you 2 simple tricks of how to navigate the spread risk. One is very simple. Factor in a liquidity sweep. This is something we should do and have to do with every hour trade of our trades anyways. And this is exactly what happened here yesterday. We had a sweep of liquidity grabbing all the stops resting above here, including mine, and then we shot down. And 2, add points to your stop. Look, TradingView has this measuring tool here, and you see stop 4.3. Now, if you added roughly 3 points to your stop, you would have a stop of 7.6. And the same here. This way you are factoring in that you have a spread risk, and you're factoring in that there might be a sweep of liquidity. Yes, this will reduce your profit. In this case, all of a sudden you're only looking at 1.6 and 3.2, but this is up for you to decide. However, this way you will see that the spread risk is basically going to vanish in most cases. If you find my work and the effort I put into these videos helpful, then consider liking and subscribing to my channel. This is a little click for you, but it is a massive help and support for me. And final words, of course, if you can or once you can, consider switching your trading to the real SCME chart and trading E-mini futures, because as the great ICT always says, this is the gentleman's market. One price, the same price for everyone. With that, have a great day and talk to you soon. Bye bye.